Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we came in today, the futures were up, 12, 13 handles on the back of, I guess, the stronger world markets, with Japan also being higher. And a lot of guys, I think, on the intermediate time frame probably came in either flat, maybe a little short or a little long. So we all had some decisions and choices to make on how involved we'd want to get, considering that the Fed is on Wednesday, considering that everyone's writing all these blogs and articles on what they think the Fed's going to do. So kind of in that middle area where if you came in short, you're like, okay, if we start poking our head above the downtrend, probably have to cover because, you know, who knows what's going to happen here. Maybe we break out and go. There's enough participation with some areas and some stocks. And if you came in a little long and you're like, okay, I don't want to miss what could be, you know, a nice close through this downtrend, perhaps on our way back to the highs. And there are some stocks showing, you know, some breakout abilities, well, whatever. You waited a little bit. This time the day was a little different where, you know, usually the counter trend trade happened within the first 30 minutes. So I know for me, I'm like, you know what, I'm going to wait for the first hour. I'm going to wait to see things hold up. I don't want to pay up. I want to work for some prices. I'm sure if you were listening to Sperling, same thing. Work for some prices, get involved, have some stops, and figure out that if, you know, maybe there's commitment to this move out of this wedge, you know, you want to be involved besides just, you know, day trading or tactically trading the action. Because, you know, there are times when I say you have to be in portfolio approach, sometimes tactical approach. I've been more tactical lately ever since that Red Dog reversal up at on May 22nd. So with that said, they waited more than an hour. They gave people conviction. I came back from lunch and I was feeling pretty comfortable, almost on the highs of my P&L, and then boom. You know, the article, whether it was the Financial Times saying that the Fed's going to taper or hint to tapering, which they've already done, you know, or who knows what it was, or they just wanted to frustrate as many people as possible. That's what the market's been doing. That's what these computers seem like they're programmed to do. Either way, you have to have a lot of conviction here. You have to have conviction that, you know what, I'm staying short, I don't care, it's going lower, or conviction saying, you know what, 5% was enough, I'm staying long, I don't care, and, you know go back and forth and beat me. For me, I'm more, you know, kind of neutral where I want to be involved, you know, where I want to put out the good tactical strategies, but I don't want to just short side myself where a lot of times I get involved in good trades and I'm like, oh, you know what, let me take it, and then I look back, you know, a few weeks later and it's a lot higher or whatever. So anyway, look at the chart of the SPX and you'll see what I'm talking about. Here is this wedge pattern. What the wedge pattern is, it's a pattern of indecision, a pattern of, you know, of higher, you know, lower highs and some higher lows, you know, trying to put in a situation where they're like, okay, you know, is 5% enough? And, you know, you get these big swings because the market's not sure. Is 5% from the highs from this Red Dog reversal enough of a correction? You know, whereas we've had, you know, a really big move. Look at, you know, the move from November, and then you go to the weekly chart, you know, look at the move that we've really had, you know, way back when. So that is why there's some volatility here, because this trend is still intact, but people don't know if it's going to stay that way going through the summer or not. So anyway, you go back to the daily chart, you know, on a more micro version. You look, if you look at how we closed, you know, this doesn't, you know, this, I would say more neutral to positive, right? Because this is the close. Didn't have enough power to get above it and just go, because we still are, you know, 2 days away from Uncle Ben speaking about what he's looking to do. I do think that he does do some kind of tapering, maybe 20 billion off the 85 billion, but, you know, I think that a lot of the people on the street understand that. You go to the 5-minute chart, it looks a little different. I'll show you what, you know, on a trading level, what we had to deal with. If you said, okay, look, I'm going to wait and give this gap up a lot of time here, you know, I want to wait and see it go sideways, digest, and then get involved. You know, here is what took place, right? This was this was your first little, you know, breakout failure, wasn't strong enough, then came back in, and then if you positioned in here in some of the strong stocks, maybe you added right there. Look at that, because what was it? The time period, 1 o'clock, and then right here, I think when we all started getting really comfortable, as if we were just going to continue, boom, okay, and then right there, you know, you had another, you know, little follow through to the downside. I think right around here is when I got stopped out of some of my names. I'm like, oh, this, you know, we could see a gap flow, we could see whatever, and then pulled back in to retest this area. And I think maybe not a lot of you guys in the Twitter sphere, but, you know, Mark made a really good call. He stood up and said, take my pain. I am in a lot of these spiders and a lot of stuff. So some people in the VTF were able to get involved in the spiders, which helped me, because I got stopped out of some of my longs. So I'm like, you know what, I don't know what longs to get back involved in. I'm just going with the spiders. and then you had a quick move to this area where a lot of us, sold some of the stuff, and then here we are right now. You look at the spiders, see that action, same very similar thing. Let's go to the time frames because I want you to see the gap. Go to East Coast. So here's the gap, and similar thing, right? Here it looked as if we were going to resolve to the upside. You had the big gap, hours of digestion, then it broke up a little bit, and then right there, boom. Didn't give you, much notice, much anything there, and then here was that little trade in the spiders where right around here is like, take my pain, guys. I still like it, whatever, and then boom, you had a little bit of a move back up, and then it closed right back in an area of the range that still makes the chart look somewhat somewhat constructive. So what do we do here? I guess you could say we held the middle of this wedge type range again. We tried to poke through, but didn't have enough conviction with the Fed Wednesday, and we still have a low or higher low, holding the 50-day moving average, holding the middle end of the range, and some things are acting well. Not everything's acting phenomenal, but you have some names we talked about. If you come back to me, some names we said that were worth looking at, but you really had to be perfect. And even if you tried to be perfect, it still wasn't hard to stay with. The Gap and Go and Netflix held, and that was really strong. You actually had a little bit of time to get in it. It closed near the highs. Now with Netflix, we could trade versus Gap and maybe digest a little bit, then goes. I'm not going to get into the daily chart there, but it came in, gave you some time, and then made a new high. Google also looking pretty good. Descending channel continued. Here was the most recent descending channel, held higher. Didn't have enough power to break out to the upside here, but I think that if you want to hold something, this is worth holding. I'm still in this one. Got a little chopped around, but overall above 891. Maybe all those $1,000 price targets come into fruition if the market breaks to the upside. Amazon also tried to push above, didn't have enough power to break out, but I guess the market's going to wait. And once again, Wednesday out of the way, but overall did clear this minor area, has some room there. Apple, I don't know, still hanging around. I guess the same way you could say this had a ascending channel that broke to the downside. Now you have this descending channel. Doesn't look phenomenal. It's a B trade at best, but if it were to clear this little area, perhaps it acts better. I think there was some news out there that there was a big option buy that got it a little stronger, the 470s for July. So somebody made a big bet that something's going to happen. It was before earnings, so got me a little bit back involved. Use a stop here of just say like 428.50, and if it were to trade above 436, perhaps, I don't know. This is a very thin pattern with this inverted head and shoulders pattern. But overall, I guess you could say it's still alive. It's just not showing much life yet. I've never seen Apple this tight. Maybe it does something. We shall see. I wouldn't have much size on it. As far as some guys were bottom feeding in eBay. I still think this pattern needs time. It's below the moving average, it's above the 200-day. Triple D looks pretty good. It's holding up above the moving averages. That's what you want to see, relative strength. That looks pretty good. SSYS, closed even stronger. X1, I think LeVay and Mike Lee were talking about it. Look at that, near historic high. So there is some things going on here. Goldman, still tight right around here, so it's waiting to see what goes on. Not much to say there, above the 8-day with some of the banks. Really, the home builders is what gave the market some confidence today. Remember this trend line that we talked about? It's held very well. You could draw it all the way back from here. I'm not exactly sure where we were drawing it from, but something like this. Came off it pretty strong, and then they came out the numbers today. Here is where it went above that small pivot, and then today they actually bought the news, and it's now back above the 821, just like this. Ultimately, the home builders being strong and the housing data, I think, is much better for Main Street, and I think it will be supported. But anyway, as far as retail, take a quick look at the RTHs, still hanging around above the moving averages. So if you come back to me, there's definitely some things to like and some things that if you want to be long, to stay with. Oh, you know what? SanDisk. Let me just show you that real quick. Look at this breakout. I know we tried playing it for a breakout right here, if you remember, right on this day. Wasn't ready, pulled in, held the 21-day, and then today it actually had a successful breakout. So it's showing you that, that gave me some conviction to be long some things, and didn't amount to much. But anyway, if you caught this breakout trade today, congratulations. Looks pretty good. Let's take a quick look at Intel. Intel trying to work its way higher. Hewlett Packard. It's still hanging around. It was downgraded by Goldman, I think, on Friday or somewhere last week, and still looks pretty good, right near the highs here, above the 8-day. So with all that said, it's hard to have such conviction right here in the short or the long side. You have to have more conviction in just trading, more conviction on smaller growth. You know, some smart guys out there say small growth, small net on times of indecision, and that's what a wedge pattern is. It's a pattern of indecision that tries to wear out both the bulls and the bears before it tries to resolve. Because when everyone finds that, I can't be short anymore, I don't trust the longs, then something happens. And we're getting close to that. We have that event Wednesday. There are some signs that you can be long some stocks on an intermediate level like I've shown you, and then there are also some signs that you could be weak, short some things. But overall, as far as like a macro investor, I still think the highs of the year aren't in. I don't think this is 2007-8-ish. I think you have room here. I think the market or the economy is getting a little bit better. We were just a bit overheated as far as the market, and now it's just a function now of what's your time frame. Can you hold? Can you handle it? And you have to know your time frame so you don't get overly frustrated. At this point, frustration is a bit high, even myself and the floor. So if that's the case, make it, take a step back and try and be a little smaller. So this way you could deal with the frustration for when it gets a bit more conducive and there's more commitment to some type of trend. Because right now it's hard to figure out what that is, as the wedge still hasn't resolved, and you might as well wait and keep it small and book some small trades and not get too frustrated. So when it does pick a direction and there's volume and there's more clarity, you could catch it versus just being like, oh my goodness, that's what I thought would happen last week and it happened this week. So with that said, it's only Monday. Brush it off. Hopefully you had a decent day. See them. Actually, I won't see you at the morning call. John will be doing the morning call. I will be on the road, but I'll be back on Wednesday. Have a good one.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.